So, how do we think the market reacted to, I guess, your midterm elections or CPI, one or the other? Are they connected? Are they not? Who knows?
Violently?
Yeah, violently. That's a good word. So we're well off the lows, aren't we? We can say that. But
A little bit.
as we look at, ES and the last leg down, it's funny, we have a TV comedy panel show in the UK called The Last Leg, and it's presented by various people with disabilities, physical disabilities. That's the whole point of it. They call it The Last Leg. Anyhow, last leg down, we are still in the ambush zone. Between, let's have a look, what would that be? 39.30, let's call it, and 40.30, nice 100-point range on the way up. So big run up for Christmas? Don't know. Big run up for Thanksgiving, plummet down? Hard to say. So we've got to be a bit cautious in this 100-point range right now. It's interesting looking at the relative location, if you like, of each index. The techs are in a pretty weak state, with Meta and Twitter and all that stuff going on. I'm keeping my eye at the moment on YM. It's the big caps that are showing the strength and forging ahead. And we saw it a couple of times last week, that ES was really getting stuck in the middle between strong parentheses, very small font, safe haven, big caps, and bad news on the techs. RTY has been nibbling through this area of aggression down, previous aggression down around 1900, is getting there. So we've really got to watch the correlations quite carefully. And I guess the awkward thing for us is, most of us trading ES, or at least looking at ES for our overall directional clues. But ES is quite stuck in the middle between NQ and YM. And so you've got to look pretty broadly across all the indices to get a sense of what's going on. So just be cautious at the moment. We're in the ambush zone and ES is kind of being push-pulled by the other indices. We go a bit more immediately. We'll come to the calendar soon, but not yet. Overnight, really balanced, small range. We've come slap bang down to the TPO POC. Funny that from Friday. It's not much excess above or below us on Friday, which is interesting. And also look where Friday traded down to. One tick, 2 ticks off, a bunch of single prints from Thursday. So we had that big push up on Thursday, monster push up. Yeah. It nibbled its way back down just above 39.50, consumed all but one of those single prints. There's another batch below us. So we've got to be mindful. If we break 50, 39.50, we could easily get down to 40. And then, who knows? And as Amy has said, no bias at all. It's another week, I think, to trade what is happening right now, the extremes, and have an idea that if an extreme breaks, where are we likely to get to, and then what is too far, and then look for movement back into the range. But the clue/dangerous thing right now is we don't have excess. Look, there's an NQ crunch TPO as well, bottom left. There's not excess above us at the highs. So how high is going to be too high? We've got a few interesting levels, single prints above us, 17, 28, just before 40. And, looking back at the daily, ambush zone, 40-30, 40-40. There's some aggression down, okay, beyond 4100. We've got to be a bit careful if we keep going up and be mindful that, there could be enough. Look at RCY as well. It's going to get to a point where it's nibbled through all that previous supply. What happens then? And also YM, on the way up, YM's last swing high is, what's that? 34, let's call it 34,370. A couple of levels above us around, big fat round number, 34,000. You can imagine a slow, dangerous grind up on everything, being slapped down a bit on the way with some sweeps. But ultimately, we crawl our way back up with some nasty sweeps down, but then we've got to see what happens at the edge of that range. So we've got to be a little bit cautious. In terms of the microstructure, the volume at price, let's have a look at Friday's high. So look, Friday's high on ES put in very nice price rejector. Just looks like it's one tick inside, two standard deviations from VWAP. Amazing. It's as if these levels have statistical significance. Yeah. But it was a decent price trajectory, but not much excess. So we've got to be mindful of that. Overnight, we have got a very small range, obviously by comparison to Friday. UB at the high, UB at the low. Fantastic. It's Monday. Yeah. It's Monday. We don't know if the overnight range is too high or too low at either end. Probably a good idea to be patient at the open today. We get near to one side, maybe we can take a ledge break, but if we're opening anywhere near the middle, which on a profile as balanced as this would seem likely, look at that big standout delta at 85. So we got through something there at 85 as well near the open. It is going to be a morning for sure to be super cautious. Yeah, we could really have a battle for hour, 2 hours until we establish what a direction is going to be. How was Friday's low? I know it's a long way down. Friday's low, not a price trajector, but yeah, I am not going to draw any inference from any of that because we've just got such a small range, indecisive overnight range, and not much excess. Okay, big earnings this week. Good. Let's have a look at that's a nice segue into looking at the calendar. Nothing jumped out at me on the calendar this week, certainly not during RTH. Okay, Reynard is speaking a little bit later today, so we need to be mindful of that, as is Williams. There's some talking heads probably going, hey, I made money on that push up. What else have we got? European stuff. We don't care about that trading CME so much. PPI pre-market on Tuesday. Retail sales on Wednesday, pre-market. Be mindful of that. Could that be enough to give us a push up to what's going to be too high? Then we establish a leg down. So Wednesday's going to be interesting. That's going to be worth watching pre-market, depending on where we are. Retail sales data. Thursday, I seem to remember the Philadelphia Fed number has caused a reaction the past couple of months. Let's just be mindful of that. And what's happening on Friday? Nothing US wise. Off the top of your head, Jeff, any standout earnings this week in terms of who's reporting?
I think I had a rough sleep last night, so I'm not totally 100%. But I think if I remember correctly, there's big retail on Tuesday or Wednesday. Let me look real quickly now. Is Tom here? He usually knows. I don't know if he posted in the pit. He usually does that too. Hang on, I'm looking as we talk. Okay, nothing huge on Monday. Yeah, Tuesday, Walmart, Home Depot, Krispy Kreme, bunch of stuff. So Tuesday is the biggie day, and that's interesting because retail numbers are also coming. So
the following day, that is interesting because you can imagine reaction in one direction, then the other direction.
Exactly. So you could really get a shake and bake on Tuesday and Wednesday because of that.
I think it's a week. I think we're going to see some nice opportunities, but not immediately from today. It would be extremely easy to get impatient and frustrated today, and death by a million Ginza knife chops until we establish which way we're going. It's going to be a good start of the week. I think the drill to begin the week is how long can you sit on your hands for?
Yeah, I was doing that drill a few weeks ago. It's a good drill.
And until something is absolutely screaming out at you, it's really going to be a good start of the week to FOMO control.
Definitely.
I'm looking to take something. There's nothing really there, but this could happen. This could happen. Walk away.
Yep.
You probably get your best return today, maybe tomorrow, by not doing anything. And only, glance at it. And if something is so flipping out, look at that. That's so obvious. Okay, that's probably a viable trade. In the absence of anything else, do nothing. That's my strategy for today.
I actually made a drill out of this, out of sitting on hands, because it's an issue for me. I like to trade. And here's how I'm doing it. The absolute best trades I've ever had are on a scale of 1 to 100, 100. And, the best setups I've ever seen. And what I do is if I'm looking at it and saying, on a scale of 1 to 100, what is this one? Is this a 20, a 50? Is this an 80? And if it's not above 75 today, I'm not taking the trade. It's that simple. So it has to be.
And that makes a lot of sense. Yeah.
Yeah.
Cool. And that keeps it simple too.
It just keeps you focused on what's the quality of the setup. Just give it a number. And interestingly. Yeah. In fact, while we're on that, it's a good segue, Lee, if it's good timing on your schedule. I real quickly, 2 hedge fund call things that were interesting. The first one goes with this, which is why I brought it up. This guy is not on this call regularly, but I've talked about this guy before. One of my friends, actually, he's an acquaintance, not a really good friend, but I know him well enough to know what he does with this. This is the fund I told you about that. It's actually a service for funds. And what they do is they track worldwide risk. I've talked about this a few times, and they put it into one number. And if you recall, the last time I mentioned this particular risk evaluation, and hedge funds subscribe to it. That's how it works. And it's a pretty sophisticated model, but it's pretty interesting. Anyway, it peaked at a 4 or 5 year high. I can't remember which, about 3 weeks ago, right before the elections, and when the head of lettuce thing was going on in the UK with your prime minister, and the nuclear conversation about the war in Ukraine. Anyway, interestingly, he reported that his metric has gone down by two ticks, which is two percentage points, which is actually a lot, but it was also at a 5 year high. So that's interesting. So a little less worldwide risk perceived. Anyway, so going to the hedge fund call, I took that to the hedge fund call, and I also was just chatting. We had the Formula One race to talk about yesterday. And so the conversation today was very interesting. We were basically saying, okay, there's 3 scenarios here for the rest of the year. There's do we get a holiday rally question? Is there a position for that, particularly that we're in the ambush zone? The other one is that, that there's bad news that comes from holiday sales or earnings, or whatever, and the bottom falls out and we have a real bad sell-off, which around the holidays hasn't happened in a long time. That's worth noting. And then the third scenario is that basically, we would just kind of drift along here. So anyway, everybody discussed those and voted on them. The one that got the least number of votes was that we're going to just kind of drift along here. Nobody voted for that. So basically, nobody thinks that's going to happen. Of 16 significant fund managers, who are all on the call together, and me. And then, so of the other 2, which do you think was the one that got voted more likely? Holiday crash, which has not happened in a long time, very unusual, or a typical holiday rally, and then potentially a January, February significant sell-off? Which do you guys think was the big winner?
I'm going to guess the most likely was holiday crash, because no one would expect it.
That's the conventional wisdom. These guys all collectively don't think that's going to happen, but they also think it's the big opportunity if we get it. The chit chat in the fund world right now is relatively optimistic, and that's exactly when you'll get the big crash. So right. And nobody's predicting one way or the other, and they will go with whatever happens. These are, and maybe
we get both.
And right? that was a couple of people voted for both. And the problem with that scenario is it's unlikely in the holidays. Again, there's a lot of dynamics in the holidays in the markets. It would take some significantly bad news.
Yeah, we've tended to see rallies, haven't we, through the holiday weeks? Yeah.
Yes.
Usually,
in fact, I wanted to throw this out to our resident statistician, Robert. That would be an interesting thing to run, because it came up on the call, and one of the hedge fund guys said he was going to have his guys look at it. He thought he had a correct number, but he didn't want to tell everybody what it was and have it not be correct. But the question was, for holidays, this time of the year, the October to January, time frame is usually bullish. And so, Robert, that would be interesting to investigate. How many times has it not been, where there's a significant down percentage move in November and December? And I also texted, or didn't text, I private messaged the Trader's Almanac guy to see if he had that. I'm sure he has those statistics, but I don't see them in the little book that he publishes. So anyway, that would be cool, Robert. I appreciate it. Anyway, so that was what was on the hedge fund call. And also there's a couple of new carry trades going on. This was interesting conversation. I don't do these, but I pay attention to them. The carry trades are when there's, some sort of discrepancy between one currency rate and interest or something. For a while, the Japanese yen was the big carry trade. Anyway, there's a lot of people talking about Australian dollar carry trade. So for those of you down under, that's interesting. Anyway, so that's the hedge fund report and the World Volatility Index. That's what he calls that thing. And
I hope the scale on it runs from like 13 to 666.
No, you know what? It's a really interesting statistical model. I'll tell you a tiny bit more about it just because it's interesting. It goes from 10 to 30. And the reason it does that is because, and it's worldwide global risk of a significant shock to the system. That's what it measures. And the reason that's the scale is because it uses an exponential approach, as a lot of these statistical standard deviation models use. For it to, and when I said it was at a 4 or 5 year high a couple of weeks ago, it was at 17. So just to give you a reference point. So for it to get to 30 isn't like twice as bad as where it is now. It's like 1,000 times worse than where it is now.
That's a logarithmic scale.
Yeah. And it's a very interesting model. It takes into account all kinds of things, Twitter trending words and politics all around the world and economic stuff all around the world and exchange rates and equities markets. And they built this crazy, model, one model. You plug all that in and it spits out a number. Anyway, so the number improved a little bit. In other words, it went down. That's what happened. It went down 4 of its little percentage points. So interesting. Anyway.
It's the unified theory of markets.
It's the unified theory of world risk is what
world risk. Yeah.
It's not just hedge funds that subscribe to this. Political leaders subscribe to it. Political parties subscribe to it. It's actually a very, very lucrative business simply because it's if you're in the business of managing risk, just no matter what you do, whether you're a hedge fund or you're an equity fund or whatever, there's so much information. How do you boil that down into making decisions? And that was exactly his mission. He said, I'm going to make one number that everybody can use, and it's a real interesting idea.
Clients of mine has a hedge fund based on this. It's AI based, where they're looking at everything. So they're looking at order flow, at the microstructure level, liquidity, but they've got stat arb stuff going on. They're looking at global macroeconomic stuff, and they rent a huge number of cores in the cloud because the model retrains itself in real time.
Yep.
It's like some 96 ARM core monster is out there running it, which costs a fortune.
Yeah,
and it has all these inputs. They throw them into a bit of code called the mixer, and then it comes up with trades. What's interesting is it has some brutal drawdowns.
I bet.
Yeah, that's the problem with any of those models. They have to work. Yeah,
it ultimately has a good idea as to what's going on, but it isn't necessarily finessing its entry brilliantly. But its big picture idea is pretty much right.
Yeah, that's interesting because they actually have a fund that tracks this. The same guy does, but he doesn't really push the fund. He just kind of does that for fun. And he was recruiting money for it about a year ago. He said, if you really want to have fun with some of your spare change, so here's how it works. It has a ridiculous drawdown, like you said, that the drawdown is like 20%, but it makes money. It's a profitable
we can
model.
make you a millionaire if you start out as a billionaire.
Right.
It'll put on a trade and it'll be looking for relatively small profits, and it will have a giant amount of risk it's willing to take because, again, that's the nature of statistics, particularly if you're dealing at extremes. So, and by the way, this guy has nothing to do with the guy that helped me with swarming. They're completely different people, in case anybody was wondering that. Anyway, so let's see what else.
See the calendar, Lee.
Yes,
well, I've put the calendar up. What do we have going on this week? So after Ides, Jeff will be doing scalping with Jigsaw.
Yeah, we'll do. And by the way, there's a Jigsaw sale going on. I don't know if you had a chance to post it yet. As JVC, I sent you the info. We'll post an announcement in the pit. Yeah, I emailed it to you.
Checking now.
Yes.
It's something like 479, I think, isn't it? $100
Yeah.
off, something like
Yeah,
that.
he's got some kind of a deal going, and we have a referral arrangement with Jigsaw. So if you're interested, please click our link on the way to go look at it, and JVC will get that up shortly.
I will.
Tomorrow, my classes, there's a fun one of what not to look at in footprints and what the various other educators, vendors advocate as being really useful. So we'll do some myth busting, which is always good fun. And then we'll look into the mechanics of puking out of people who are trapped in price rejectors and absorption. So we'll do that. Dojo and some scalping on Wednesday. Busy day for me on Thursday. Fishing trip, absorption, which can take a lot of repetition for people to come comfortable with. And we'll look at how to play Zero Prince. Friday, what drills are you doing on Friday, Jeff?
I'm gonna think about that. I haven't nailed it down yet. We've now had 2 sessions of the drills class, and they've both been great. We've had a lot of fun, and I think they're really good. I think one of the things I'm gonna do, I've talked about the range drill, which is the new one that I hadn't talked about before we announced that last class. I think I'm gonna show some examples of that if we have them, and then I have 5 potential ones. I'm going to narrow it down to 2. So I'll post an announcement by Wednesday as to what they're going to be on Friday.
Cool. And then on Saturday, we have got another in our new series of the business of trading.
Yeah.
And we're going to make this publicly available. We're going to critique the various asset classes and look at the pros and cons of everything. So that should be a fun section.
Yeah, that'll be a lot of fun from a lot of different perspectives. Crypto, options, ETFs, stocks.
This will be an especially good one if any of you have friends or people that say they're interested in trading, but they don't have a clue and they aren't going to listen to you and they need a clue. This might be a good place for them to at least get their head around the different assets and what makes sense and what doesn't.
That's totally agree.
Very good idea. In fact,
it's a very good
osteopath to that because he has started to express an interest in trading.
Yeah, I think part of what will be really valuable with this class is just among us, we have some really interesting experience. JVC has done a lot of crypto trading back in the day. I started, with options when I was a kid, and options were my
me too.
Holy grail for 20 years. And, I literally day traded the way I do the futures now using buying and selling options. I mean, how stupid is that? But there was just no other way. I was paying just tons of premium. So yeah, I think it's a really good, it'll be a really good conversation just to go through all the different things and what's good and what's bad and what's ugly and
why. Yeah.
And why. Yeah.
And what
exactly.
we can do, let's make a little mental note. We can start to talk about the new event contracts as well and then cover CFDs and the implications of those.
Yep.
Yeah. Cool.
And and particularly, if you're in the United States, there's a lot of tax implications around these things, and so it's a really good topic. And I'm gonna invite some folks too that have same story. Always tell me they're interested in trading, but you never know until they hear some of the pieces of it. Oh, Tom has more than an options background, David. Tom actually was a floor trader in the at the options exchange. So yeah,
he was bare knuckle brawling in the pits.
That's right. Yeah, and the
options guys are too smart for that. They just sling very, very obscure insults to each other.
Yeah. Yeah, in that time, I visited the options pits in the 70s and 80s, and in those days, those guys just had a license to make money. The spreads were so big; it was just a crazy, crazy time. I wish I understood it better at that level when I was there, because it would have been a good direction to go as a youth. Anyway, let's see. Yeah. A Ute, yes.
So I'll talk a little bit about this Dallas thing that's going on. And
tell us about
that. Let's actually bring up it on the TRG website. Then we've got some props, haven't we? .com/special. Hello, special events.
You like to go the long way around.
Yeah. So, probably worth explaining why this is happening as well. Next emoji release has been gently maturing over the past 12 to 18 months. And it is, say myself, it's flipping amazing, but it's really deep.
I'll agree.
Yeah. And the whole mindset I've had with it is, how can I build a tool set which is kind of getting my thought processes into tools and machines which can be really mechanical and ultimately provide a chance to automate some of the ways in which I trade some of the setups. So let's think about something like an inside out, a B2A. And I'm trying to firstly understand, well, how many times does a B2A happen and in what direction? How would we assess the best direction? How would we assess a good entry point? Once we found a good entry point, for example, a price rejector within 3 ticks of some previous structural inflection point, what's the ideal time to enter based on people queuing? And this is not easy to automate at all. Yeah, we've got 4, 5, 6 different decision factors going on, and they're not always the same decision factors. So it started out with, okay, how can we have a nice generic automated trading engine? But then it expanded into a whole bunch of, but there are various supporting tools that you need to feed the engine. This in turn led to a lot of enhancements of the existing emoji tools. I mean, think about the existing emoji tools as doing pattern recognition within the traded volume and visualization of some of those patterns, as well as tracking through the emoji zones. Then it led to a whole bunch of enhancement on how the emoji zones are tracked, because I contend there are actually flaws in how they're tracked at the moment. So the new tool set is about 35 different pattern recognition things, with the existing filtering and visualizations, an automation engine, 3 market profile analytics tools, some trade management tools, the Pucometer, which is looking at the balance between traded volume and liquidity, some MBO stuff. It's huge. There's about 50 different things. On top of that, I have also been working on some new tools, which will be the Easter egg for people on the first day, so that we can leverage the data that sits in your platform and start to make it easy to do statistical explorations of the data and ask interesting questions, but have it presented really graphically and beautifully, way beyond the capability of what the platforms can do. So you can start to quite easily go, well, actually, I've had this idea. Is there an edge on this? And this came about really, well, I've been looking at this about a year or so, but it came about as I started diving into the event contracts. So there's a whole heap of software going on. The public release of this, public release, this won't be ready for launch until sometime in Q1, probably, let's assume, end of Q1, because it's software. The Sierra chart stuff is pretty much done, 80, 90% done. It's obviously got to be done ahead of this event. But before it can be released, it has the simple stuff, the pattern recognition, the visualization, has to be ported to NinjaTrader because there's already running licenses on NinjaTrader. So that port is about 6 weeks, and then doing the documentation and the website, blah, 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 is another 2 to 3 weeks. So I have had people for ages, partly because some people remain nameless, keep dropping hints about what's coming. So I thought we've got some very knowledgeable people in TRG now, in terms of the trading setups and some of the applications of what's in the emoji tools and what sits underneath them. There are various longer term emoji people who've been really screaming out for it, and everyone goes, I can help you with a beta test, but a beta test doesn't help me, because if someone's going to test the software, they need to know it inside out. And in the time it takes me to train someone on the inside out, that is no different to me writing all documentation. However, I am traveling through the US in December on routes to Central America. So I thought, if I'm in the US, we could bring the mountain to Mohammed, or vice versa. Hence why a few weeks ago, I sort of did calls for an expression of interest. If I were to run a workshop, what kind of thing would be interesting? And overwhelmingly, people said, deep dive on emoji, please. And I thought, okay, we can kill 2 birds with 1 stone. We can get new emoji into hands of people that want it. We can give them really intensive training, like massively intensive training, so that they understand what's the ethos of everything. What's the thought process behind this tool? How do you use it? What can I now go and do with it? And that's when I put this agenda together. So the classroom training in Dallas from the 8th to the 10th. The real meat of it is the afternoon of the 8th, where we will be diving into the thought process behind looking for setups using stats. And we'll have some associated tools, which is a surprise for everyone who's coming, to go and play with on that. We'll also do a fireside chat session on how you really, really game evals and combines and stuff like that. The mornings are warm up. Some people will be flying in that morning. So we'll do some live trading, but it also makes sure everyone's on the same page in terms of terminology, the setups, this kind of thing. The meat of it, though, comes on the Friday and Saturday, where we will be going through everything in the new emoji toolset. The first day is kind of quick refresher of thought process behind pattern recognition and visualization. Then we start to get into MBO, market profile, trade management, some new dynamic studies, new visualizations. Then on the second day, we look at the automation engine, which only has about 120 inputs on it, so it shouldn't take long. And then we'll work up sort of collaboratively, let's build out 2 or 3 automated setups using the engine. And feeding into that is going to be stuff that we've covered on the previous day. So it's going to be pretty heavy, pretty intensive workshop. You leave it not with, I can now go make money using X, Y, and Z. You leave it having really been trained on, here's a new tool set. I understand thought process behind it. I understand how to drive it. Now I can go up and explore and play. And this is kind of priced at, what's the sensible day rate for training? But anyone who comes on it is going to get access to all the new emoji tools until they launch, likely the end of Q1. Full tool set, when it launches, is going to be anywhere between 99 and 249 a month, depending upon the different options that are taken. So you can see, there's decent saving anyway for probably 2 to 3 months access. And anyone that comes on the workshop will get a discount ongoing on the retail pricing once it's launched. However, not everyone finds it easy to get to Dallas because, they're only on the same continent, unlike me. And it can be awkward for them to hop on a 1-hour flight. So I have, by popular request, also put together some Zoom training around a similar agenda. We won't be doing the live trading. We will be doing this very much release access. I'm not even going to find it, am I? We'll be doing it very much as let's actually understand these tools in deep detail over Zoom. But it's going to be like classroom training. Webcams on, this is going to school. It's not going to work if we don't try and recreate a classroom. So I'm just going to bring up this link. Let's find it in another browser, copy it. Here we go. So this came about partly from some clients I've got in Australia in the Far East who, were looking to do it remotely. And I will run the emoji focused content we've got 2 different time slots. There's Friday through Sunday, 2nd to the 4th of December, 1 p.m. to 5 p.m. Central every day. And there is also 14th, 17th, and 18th of December. It's basically the week before the classroom, the week after the classroom, pretty much the same program. So we could share these links in the pit, I guess, JVC. We could do that.
Sure.
But, classroom and pre-release. But the whole idea is 3 intense days getting right inside the thought process of these tools and becoming expert in how to use them and gaining access to them for 2 to 3 months ahead of their real release. That's all included in the price. So that's what we've got coming. That's what I've got coming. So I'm looking forward to it. Some of these tools are pretty mind-blowing, even if I say so myself. They're enabling things to be done that you just can't do as a human. So we're going to have some really interesting conversations around that, around automation, around semi-automation. For example, saying, right now I want to get short, press a button, the computer will get short when the time is right, and how we can use the tools for things like that. That's going to be really good fun. So that's what's going on.
Awesome. I am really looking forward to Dallas. It's going to be a lot of fun.
Yeah.
And I think there's still
in Dallas.
There's 1 or 2 spots left for Dallas, right?
The meeting room nominally in Dallas is probably comfortable for up to 12 people. I think we've got 9 in the room so far. So, I would say, if you're on the fence about travel or what have you, if you are able to travel, it is likely to be a better learning experience in the classroom because ability to do whiteboarding and see, look into the whites of your eyes and that sort of thing, than over Zoom. Zoom will be pretty good, but you can't beat classroom learning on complex stuff. It's the best way.
For sure. Cool.
All right. Well, then. Going on. We'll share those links.
Yes, indeed.
Yeah. And JVC has said that he's up for, feeding everybody over 3 days, so long as they drink Soylent.
And cat food. I'll bring plenty.
There we go.